pal.
Hey there, welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at the crossover of startups, enterprise, finance, tech, and everyday life. I'm Pete Townsend, your co-host of Money Never Sleeps, along with Owen Fitzgerald. This episode of Money Never Sleeps is kindly sponsored by Ireland's fintech and financial services recruitment specialist, Top Tier Recruitment. If you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it's highly advisable that you build a relationship with the team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com and tell them we sent you. This week, we've got another Money Talk segment where we dig into a few of the things that happened in the past week, where our collective interest in these things outweighs our respective interest in sleep. So let's just get right to it with this week's episode of Money Never Sleeps.
Money never sleeps, pal.
Here we go again. Welcome to Money Never Sleeps. We're recording today from the home studio. And in this episode, we're looking at a few pieces of content from this week that are relevant to us in this big old cloud of startups and enterprise that we operate in. And hopefully it's interesting to all of you as well, our loyal, wonderful listeners. Got Owen Fitzgerald back again this week. How you doing today, Tiger Beat?
Good. Tiger Beat, what does that mean?
Tiger Beat is like a U.S. magazine from the 80s where all the boy bands were pictured on.
Oh, cool. Okay.
Yeah,
okay.
Yeah. There you go. You
disclosed that works for me.
Yeah, you disclosed to everybody this week in the newsletter. It's sign up now and subscribe at moneyneversleeps.substack.com.
That's it.
That you do have, just like Dennis Rodman, you have dyed hair, you have earring, and you have tattoo, right? Yes. So we're in good shape. I used to have an earring. You can kind of see it a little bit tiny.
I didn't know
way back when my kids look at it. Yeah. When I was 19, a girlfriend convinced me to take it out because she didn't think it was cool. But long time ago.
Things we do for women. Huh?
I know. Here I am in Ireland. Here we go. All right, pal. Listen, let's dig in. Just so much crazy stuff happened this week. I think you must have been Rip Van Winkle still asleep if you didn't see the news on crypto Twitter. I'm just going to call it crypto Twitter. That's what people call about. There's a contest every day who can win crypto Twitter, which is some, post the funniest thing about Bitcoin or crypto on Twitter. But this is actually the Twitter hack where a bunch of folks, well-known folks, famous people the world over, ended up getting their Twitter account hacked with a request to send Bitcoin to a specific address. So this kind of shocked the world, and there's lots of outcomes from this that I think people didn't expect. But what do you think about it, Owen?
Yeah, look, it was really interesting because for a few reasons, it turned out to be a bunch of kids ultimately.
Was it? I didn't catch that.
Yeah. So they found out it was just some guy who worked in Twitter who got access to some of the code from their Slack channel. And himself and his mates just decided to tweet out this ridiculous kind of request for Bitcoin. And they ended up getting something like $300,000 worth of Bitcoin. They took over, maybe 130 all kind of blue tick accounts, like really big names, Bill Gates and Obama and stuff like this. But I mean, I suppose it exposed one thing, which is kind of the piece that'll be maybe the long-term impact of it, that like if they were even in any way smart about it, like they could have had a massive impact on markets.
Oh, yeah.
If you remember back to when Elon Musk tweeted about Twitter or about Tesla stock being overpriced and the stock went through the roof. Like if this had been a really kind of coordinated attack, they could have had a massive impact on markets. And I think that's kind of to me the bigger potential outcome from the whole thing is that obviously there's the first piece about how was it done and it impacted on Twitter stock and poses a lot of questions, but it also raises the question about the potential impact of accounts and large accounts with big multi-million followers and the impact that has on businesses and the markets and stuff like that.
Oh yeah. Like our friend Andrew Mullaney, who was on, way back in the 50s. Yeah. I mean, part of what he's doing with his trading analysis, market sentiment, analysis is looking at Twitter accounts, right? And seeing what is the market sentiment for different things going on. And Elon Musk, absolutely. He was one of them that got hacked. Bill Gates, like you said. Joe Biden, Obama, like you said. Yeah. So Apple themselves, Jeff Bezos.
They were really, there's a couple of names there that would have had a massive impact on share prices.
Jesus himself, Kanye.
If it had been done.
Shout out to Kanye.
In fact, no, people probably looked at Kanye's one and thought like, this is just him, like normal. Him having a crazy day. So like I mean, it's got to put a lot of pressure on Twitter now to do something about it.
Yeah, no, I thought one of the interesting things was that they could have got a lot more, right? Oh, yeah. But absolutely. Coinbase shut down pretty quickly that address and wouldn't let people send any Bitcoin out to that public address. So I think it was something like in the hundreds of thousands that they potentially saved. It was a pretty big number, but 280,000, right, is what they kind of shut down and prevented from going. And then Noelle Atchison, she writes for CoinDesk and has this great column called Crypto Long and Short. She said why it was good for Bitcoin, and it's not the media attention. One, it's the focus on the trackability and the traceability of Bitcoin transfers compared to regular currency or fiat, right? It's just there are ways to track and trace this that are actually more certain than trying to track a SWIFT transfer going somewhere and bouncing all over different correspondent banks and ending up some Nostro account somewhere, right?
What was funny was that I believe it started because these guys wanted to just hijack like really kind of iconic Twitter handles. So like at the number 6 was one of the ones they were looking at. So they were trying to find a way in so that they could like take over some like, but not even like celebrity accounts. That wasn't the purpose of it initially. It was, can we take over these like really cool sounding Twitter handles? So like there was a massive, obviously in some ways this could have been way worse for Twitter if they had, if this had been a coordinated hack by someone like really looking to do damage. This could have been very bad for them.
Absolutely.
I don't know.
No, but I think there was, some chitter chatter going around in the US saying, are we going to ban Bitcoin because of this? And it's like, it's not Bitcoin's fault, right?
Yeah. No. And actually, the funny thing is, like, there was a lot of commentary then saying, well, like, look, Twitter can be hacked, but Bitcoin can't be hacked. So
exactly. So, okay.
So my
anything else on that story?
My 20 euros worth of Bitcoin that I have still hasn't gone above 20 euros. So I'm waiting for something big to happen.
Yeah, 20 euros is going to get you a long, long way, right?
Yeah.
You get 100x return on that. You might be able to buy like a 1974 Ford Escort or something.
Yeah, that's just what I need.
Exactly. Awesome. Maybe a little bit cheaper than that.
Yeah.
Okay. Next story, the Ant IPO. Ant Group, previously Ant Financial. So Jack Ma's fintech giant is starting the IPO process in Hong Kong and Shanghai. This was reported by TechCrunch, 20th of July. So Ant, for those that don't know, they operate the Alipay wallet used across the whole Alibaba e-commerce network, which is kind of like the Amazon of the East. Probably doing it a disservice by describing it that way. It's a much bigger, broader ecosystem. And they have 1.3 billion users globally. And so they are kickstarting it, and they're going to do, like I said, Hong Kong, Shanghai. I thought the funniest thing was the Shanghai Stock Exchange, NASDAQ style. I didn't even know it was called this, Star Market. Star Market is an old grocery store in Massachusetts, and it wasn't Star Market, it was Star Market, right? Goodwill Hunting with the Star Market, Southie. Yeah. So that was just a little bit entertaining, sidecar to this story. Interesting thing that I didn't know, which was about half of Ant's revenues last year came from providing their tech infrastructure to enterprise clients rather than their own financial products, their own proprietary financial products. Doesn't necessarily sniff a wire card, but it was just something to think about there. But I thought this was big news. I know you thought this was big news. You texted me on it yesterday, and I had already had it in the show notes, right? That we're going to talk about this. But the one thing I kind of thought about was that coming to market now with a $200 billion valuation, it's about the same as what PayPal is right now, right? And, Chris Skinner talks about Ant all the time as an example, right? And all the praise that it gets by those of us in the fintech circles, it's really only as valuable as PayPal. And that's no small feat, but it's not Amazon, right? What do you think about this?
Yeah, so look, I mean, this is a really interesting one. So I was looking at some of the numbers on it. I mean, Bloomberg had a really good description of Ant Group the other day. They call it an online mall for everything. So like it's this funny combination of PayPal, JP Morgan, and Amazon that's only going to get bigger. So like, they've Alipay in itself, the payments app part of it has 1.3 billion annual users. It's pretty much a super app that handles everything. Then, another kind of reported piece of it is that now I'm going to get the name wrong of this, I know that, but it's Weibo, which is the world's largest, or the third largest money market fund. So there's 600 million users. So I mean, if you think of what can be done and what we see in the different markets with the likes of Robinhood and stuff, and all the amount of money going in and out of that type of business these days, like there are so many different pieces to this. So like I would say that it's incredibly undervalued, which sounds strange at 200 billion, but like it really is in the sense of what could be done with this. And, like it's funny because obviously the US-China issues that everyone is well aware of is the reason that it skipped the US capital markets, choosing this dual listing in Hong Kong and Shanghai. And your star markets, as you mentioned, the fact that it's only a year old is a bit random. But I think this is massive because this is an incredible business, something that there isn't the likes of. Like I said, it's a combination of a couple of other things if we were to try find a comparable in the Western world. So
there's nothing like it. I mean, it's the demographics in China that are just so unique, right? It's like the city of Chicago to me. I love the city of Chicago. I've been there once, and the architecture is so amazing just because commercially Chicago started coming into its own as a market. I think it was towards the end of the 1800s when the technology of architecture made it so you could build these really cool buildings with these interesting materials. And it just ended up being a very cool looking city that I totally underestimated. I had no clue it was like that. I was there a couple of years ago. With China, that demographic came of age, for lack of a better word, round about the time where technology and smartphones were enabling people to kind of skip a whole bunch of the other stuff that we had to go through in the East or in the West. We're in the West, right? Yeah. I think that all of the things that they've been able to achieve there, I think they're 5, 6, 10 steps ahead of us on this side of the planet,
absolutely,
right?
Absolutely. And it's just like and it probably is Chris Skinner where I got the term before, but like these are companies of the internet. We've talked about it before with, the legacy banks issue and the infrastructure piece, and like the likes of Ant Financial and Alipay and these, like they upgrade their core technology systems every kind of 3 to 4 years. They do complete upgrades. Like, they skipped the credit card phase. They skipped all of these things. These are super apps. They're built on the internet. They're, financial services products of the internet. That's what everyone knows. And that's like the volumes going through these things it's just incredible.
I know. And I forgot about the Weibo thing because I used to talk about this 2 years ago on the biggest money market fund in the world. And given Ant Financial's or Ant Group's infrastructure, basically the way it works is that whatever cash is left in your Alipay account at the end of the day, you can elect to have that swept into a money market account and earn interest on that overnight, right? And Ant kind of said, well, listen, we're really going to have a lot of problems going through these old school channels that investment funds and money market funds operate on. So we're just going to do it ourselves. And I think their custodian is some big Chinese bank, but they built all this tech themselves. And if that tech actually made it to the West, I mean, that would eradicate so much in terms of, legacy infrastructure here around money market funds and how they operate, getting rid of fax machines and stuff like that.
And look, I suppose the challenge now with that is that, can they continue to grow? Because they're obviously, they're battling Tencent over there. They're fighting for market share off each other. But obviously there's public issues with Chinese and Asian technology companies in this part of the world. So you would wonder, will that impact? Like clearly it's impacting already on the fact that they're not going to list on the US stock market. Will that impact on their ability to kind of move west? It's possible. I mean, you're seeing.
Well, what does an equity flotation do for you, right? Lets you raise more money using your stock as collateral.
Yeah.
And it's going to be harder for Western banks. They'll find a way, but to actually accept. Well, no, I'm not going to go that deep into it because I don't know the history of Western banks funding Asian businesses based upon stock as collateral for businesses that are only listed on Asian exchanges. It's a rabbit hole I can't go down to through
not
to
for
tonight.
today.
No. Okay. Good. The Chris Skinner, just to mention him, and I think on LinkedIn, I think I'll pick it up on this, Owen. Anytime that I tag him now on a LinkedIn post, either he's blocked me or he doesn't let anybody tag him anymore on LinkedIn posts because
he's pretty sick of it.
Yeah, exactly. But like we were saying before we came on air tonight, Twitter, forget about it. He's everywhere, right? Yeah. I've got notifications set to come through on Twitter to my phone from you, from Chris Skinner, and Brian Armstrong from Coinbase, because that's how I follow what's going on with Coinbase part of the time. And then I think I get Alan Meany as well, just from Fundrex, just because he's so,
that's a great group of guys there already.
Absolutely. I think I need to get a more diverse crowd there. I'll put Arlen Hamilton in. Yeah, because she's pretty cool too. But Chris talks about TechFin, right? Yeah. Which is, to me, a company that came up through the ranks as a B2C tech company, really is what Ant started out as. And because of how important money is to people's everyday lives, which is the C and the B2C, Ant started enabling financial transactions in their whole ecosystem, and they kind of became a fintech, right? So it's this interesting angle of starting out as a tech company, but you're B2C, and because you're B2C, money is so important to your customers in terms of their life, you're just going to naturally gravitate towards helping them pay for things, helping them manage their money. This is a concept that, I don't know, most people don't think about, but is, you think about that 20 years ago, it never would have happened.
But I mean, look, we're seeing more of it now. We talked about it only a few weeks ago. Like that's what the tech companies are looking to get into. You already have a critical mass, so you're just trying to provide extra services to them and keep them within your ecosystem. And that's clearly what goes on here. Because obviously they can, whilst they, and I don't know the exact order of what happened when, but I mean, Alipay obviously, and bringing more and more into that app, making it a super app where you do everything through it. You're going to have to keep adding on services and products to keep those customers within your kind of ecosystem, but it gives you that critical mass then to do that. And we see Absolutely. It now more and more with the Western technology companies trying to do the same, monetize, on the fringes of financial services. So, I think it's an incredible company. So there's, it can only go up.
1.3 billion users, right? Like incredible. That's just blows my mind.
Yeah.
Obviously Facebook are above that now, but
but I mean, you're talking about an entirely different business model and way of monetizing. Like that's 1.3 billion active users of an app that is making payments and all sorts of financial services versus the 3.5 billion or so that use Facebook on a monthly basis, but they're not being monetized in the same way. So
on that note, good transition right into the next story. You picked up on this. I'm getting to terms with Instagram now, but they've launched their redesigned shop, now powered by Facebook Pay, right? And trying to figure out the integration between that and WhatsApp and how that's all going to work. But we know the Brazilians kind of kibosh that anyway. But we'll see what happens there. But tell us about what happened there.
Yeah, well, look, I mean, this was the reason I was looking at this is because Instagram has a redesign. It had a shop kind of function allowing kind of companies to, so Instagram shop, it's a place where you browse products from your favorite brands and curated collections. And in the shop, you're able to filter down different categories and then you can check out stuff directly through the app. Not unusual. We see it with others. I suppose this is I found this interesting on the basis that it's to me, it's a view on, where is e-commerce going? So like if you imagine, we talked there about Bloomberg describing Ant Group as the online mall for everything.
Yeah.
There's a view out there that Instagram is going to become like a mall, like America's favorite shopping mall, because obviously it's allowing a certain generation the ones that would have hung around shopping malls, like you imagine the Dundrums of the world, even where you'd have younger generations hanging around. And this is something where they get to go. Obviously, they're interacting with, their favorite people on Instagram. it's already capturing their attention and monetizing that through ads, and then it's going to monetize it by selling them their favorite kind of t-shirts or products through influencers, and making that. So I suppose where I see it kind of changing things is that it's making shopping a bit more social in that respect, as a social experience, as opposed to mainly transactional as it would have been in the past. And I think that's possibly where you're going to have the change around the types of e-commerce, because actually, and it does tie. It very clearly kind of overlaps with what we were talking about there with Ant Group. So, 56% back in 2013, PwC had a report, 56% of all Chinese online consumers buy products through social media platforms. So it's been slower, obviously, in the Western world, but it's going that way. So, we're talking about what they call friction-free commerce, and that, being able to go on and look at something you're already on, especially for a certain generation who'd be on Instagram all the time, interacting with their favorite kind of celebrities or whatever, but being able to go instantly in and buy the particular type of clothing that person is wearing in that shot, or in the, on that picture that they're looking at. I mean, it really kind of changes
big time.
Changes e-commerce in a lot of ways, and the way people both market and kind of provide those solutions. And then obviously, look, again, with the Facebook Pay bit, it makes that more of an integral piece of, and in terms of their monetization, and making that more of a tool for payments.
Yeah. Have you used Facebook Pay yet?
No, I haven't actually.
No, me neither.
I'm not on Facebook actually at all.
That's right. Yeah. No, I had to pay my sister. This was hilarious. I had to pay her $213 US. She had some 40% discount off some shop in the US. Her husband works in it's a long story about the industry he works in. Anyway, sent a whole bunch of clothes over to my family here with a 40% discount they get there. And so I'm like, all right, well, I got to send you some money. So, oh God, how did I do this? I sent the 200 or whatever it was in euro conversion to TransferWise, right? Converted it in TransferWise to USD, and then sent her $213 to her regular bank account with her routing number and account number, right? I probably could have just sent her the money on Facebook Pay.
Yeah.
Right. So yeah, it's those kinds of things. But we've talked about this before, and I think I've used examples like that before on the show, that it's these one-offs really where you think, oh, that'd be much more convenient. Yeah. But when you start actually, and I think the key point, and you've said this, people scrolling through Instagram and looking at pictures and saying, I want that. Right. And how brands put those pictures up there, and people just get so used to flicking through them. So yeah, it does make a heck of a lot of sense that you can just say, yeah, touch, I want that one. And it's paid for, and it's, on its way to you from the shop or whomever.
Yeah.
Was it Facebook put up a new shop front? I think we saw that news Facebook, a couple weeks ago.
Yeah, we briefly touched on it a few weeks back. Oh, I can't remember exactly. Yeah, but they had rolled out a kind of payments or a shop function through, because like the thing is, they're all trying to copy each other anyway.
But Facebook owns Instagram, right?
Yeah. And Instagram, I think, is going to start rolling out, or is in the process of rolling out a new feature, Reels, which is effectively equivalent to Snapchat. It's a thing that I suppose closes off after 15 seconds or whatever.
Yeah.
I mean, I have a 13-year-old daughter. I should know a lot more about these things.
Yeah, I know. We're nearly getting there. I read something like 60% of all kids from the age of 9 have phones now, and I'm like, my 9-year-old doesn't.
Yeah, neither does mine.
But no, I mean, if Instagram are doing shops, Facebook are doing shops, it's like, are they sharing the same infrastructure? They're sharing some of the same, developers on all this stuff, and say, well, we got different audiences and different types of user demographics on both. But a lot of folks use both, but some use one or the other.
Look at it this way: Facebook Pay, allows you to transact securely across Facebook Messenger, Instagram, and WhatsApp. I mean, if you think of, we were talking about the WhatsApp numbers there a few weeks back, and we were talking about the markets and like the 600 million users that they have in India and stuff. But like when you start adding all those together, that's an enormous kind of customer base that you have that you're able to monetize or provide access. And the amount of payments going through that, I'd say probably in the next year to 2 years, like it's going to be astronomical number of payment transactions.
Absolutely.
Through it. So,
absolutely. I thought the influencers side of it was really interesting as well. I've started to get my head around that recently. I've got a client who's was doing a product launch in a new country, and they said, "Well, we're just gonna do it on Instagram." And I'm like, "What about Twitter? What about LinkedIn?" They're like, "We don't really use those."
Yeah. Yeah.
And I don't even know if we talked about Facebook, but they had 3 or 4 influencers that were pretty good at generating downloads for things. And because they were on topic for this particular business, they said, all right, we'll do business with these folks and sign them up. And it worked, right?
Yeah.
And they got way more downloads than they thought they were going to get.
Absolutely.
Versus me saying, let's put something cool on Twitter, right? I would have got nothing.
And as well, like what they're doing is what they've built out within kind of Instagram Shop is the analytics side of it. So you as the product owner and as the company, then obviously you're getting far better analytics on it. So it becomes now like a enhanced tool for you to use, the same way you would have got it across, a different version of that sort of tool across Facebook. So
absolutely,
I mean, it's just finding more ways to monetize what is already a massive customer base. So
yeah, absolutely. And speaking about customer bases, Robinhood have decided not to go ahead with trying to get a new customer base, right?
Yeah.
So they scrapped their UK plans, which I thought was interesting.
Yeah, so I mean, they've been getting after we talked about it a few weeks ago, and we wrote about it in the newsletter. They've been getting fairly hammered in the US. On one hand, obviously, they're still making plenty of money, but on the regulatory side of it, so. There's a view that, the reason behind that was that they didn't want the enhanced kind of regulatory oversight from the UK, because what I believe is a lot of the trades are rerouted through high frequency trading kind of brokerages, and they effectively pay Robinhood to get access to the trades. I believe that you would have to have a different type of model in the market in Europe in particular.
Yeah. There's something with market makers as well, which is different in the UK. I thought this was, equivalent to me of N26 deciding last year to scrap their plans for the UK, because with Brexit, UK becomes what is in effect a closed economy with only 65 million people.
Yeah.
Right. If you're going to make bets, make it somewhere else. Yes, there's loads of wealth in the UK and in terms of the society and where people are demographically. Yeah, there's a good chance they're going to use Robinhood, but there's already, I think, a number of those apps.
Exactly. So they've mopped up. I mean, they've 13 million customers in the US. They're valued at 8.6 billion or something as their last fundraising round. They're automatically competing over here or over in the UK, even with Revolut and Free Trade and Hargreaves Lansdown, who you'd know well. So it's hard. It's a harder push for them, and then having to probably tweak the way they go to market and the product that they offer. I'd imagine it may not be worth it in the current environment.
Yeah, I don't think so. And I looked at probably 3 or 4 news stories on this, and all of them were kind of like, they want to focus on the home front. But like you said, there's more in this that if you read into it, it's just there's got to be some economic reasons why they didn't want to do it.
Oh, absolutely. I think they have enough on their plate, I'd say, and I doubt they want the regulatory oversight in the same way.
Yeah. Another one that shut down that I thought, Jesus, I would talk about these guys here and there when I was talking about how to get, Gen Z users or Gen Z users and investors into the investment net motif, which let you say, listen, I'm a tree hugger. I want to, I can invest on a tree hugging motif or something to that effect. There are all these different themes that identify with you and what you believe in and, things that you think are impactful for the world, and you can invest in those. They shut down in April. I totally missed it. But I think it's the point is that you cannot just build an investing business around Generation Z. You can't, right? Because that's totally undiversified demographically, risk appetite, risk profile. You need a good mix of stuff. Even some of the like UBS Smart Wealth shut down last year. I'm like, they were advertising on tubes in London, right? Smart wealth. What does that mean? Does that actually, compel people to say, I want to download that? And, it's a tough business.
I think it depends on. So obviously, there's a direct comparable here with Robinhood. So if you take how they've grown in the US, particularly over the last few months, like it's been a certain type of person, and you would argue that none of those types of customers, young Americans who ultimately are probably betting on the market, and it's a version of gambling, or what did Scott Galloway call it? He made some reference to crack cocaine anyway.
Yeah.
I'll find
Russian roulette.
Yeah, exactly. So it's a different, like I said, Robinhood have added another 3 million customers in the last couple of months, but it's very specific. It's online gambling in effect. It's not the same thing here. What Motif are doing. Are the people who are interested in impact investing probably a younger generation? Are they really going? Do they have the wealth first of all, and then are they going to be, trading it or investing it? Probably not at the moment. I wouldn't have thought.
Yeah. No, and I thought, and we talked about this before a couple of weeks ago. It was either Free Trade or DeGiro or one of them that had a huge wait list just because, there was no football going on and people couldn't bet, right?
Yeah, that's it, exactly.
So they're betting on stocks and you get a whole bunch of new users in there.
Yeah.
I was reading something else tonight that when stock prices have absolutely no correlation to what's going on in the economy, i.e. the United States of America, that it is gambling. Right? When you're betting on stock prices, because there's no actual qualitative analysis that goes into this. It's just stock prices bouncing up and down like a freaking yo-yo.
Yeah.
Yeah. I don't know. Anything else jump out at you this week on different news stories?
I saw that Palantir, which is the Peter Thiel kind of really secretive data company, had filed for an IPO. That was interesting, mainly because you've heard there's been so little known about it, even though it has these really big government contracts. And Peter Thiel, he's kind of a polarizing character, obviously incredibly well respected in the venture space, but has his views that obviously would go against what maybe the majority of people might think. So it's an interesting one because they do seem to be doing a lot of strange or kind of unknown work for different parts of the US government. So I'm surprised in some ways that it was going for an IPO. When I saw the news, I was like, I kind of expected, because it was so secretive, that they wouldn't have any issue raising money and they wouldn't need or wouldn't want the kind of scrutiny of an IPO. But
yeah, no, I hear you. I remember back, I was at a conference back in 2014 when I was still in the corporate world, and the senior executive of one of the big European banks just had come back from a tour of Silicon Valley, and he was talking about he had seen the future and apparently had got some presentation or got some look into Palantir. Was talking about Lord of the Rings and all this other crap going on. And I'm like, sometimes I just feel like these businesses solely exist to excite CEOs of businesses with crap technology, right? But hey, I'm sure they're doing some really interesting things. If they've actually got it to the point now where all this money they've put into this, they actually can justify going to IPO, good for them. Yeah. Anything else?
Not specifically.
Okay.
Lots going on.
Yeah.
Busy writing a newsletter for this week. Bruce Lee themed. So big Bruce Lee fan. That'll be interesting.
Nice. Yeah. One of the things I picked up on this week, I was coming home from somewhere yesterday, and this song came onto the radio, and it was called "Is Mark Zuckerberg a Ghost?" Right? And I thought it was a parody of something, but it wasn't. It's just these guys called Nap Eyes, right? Like you wake up from a nap and your eyes, whatever, Nap Eyes. So you know what they're smoking, right? So "Is Mark Zuckerberg a Ghost?" You check it out online. I'll put the links in the show notes. The lyrics are pretty funny. And then tonight on the musical front as well, for some reason, this song came into my head. My Mind's Playing Tricks on Me by the Ghetto Boys from the 90s. Do you remember the Ghetto Boys?
I do not.
No, they were like before your era, like before Jay-Z. And yeah, they were probably heyday in 91, 92. And so for all the parents out there, do not play the song Mind's Playing Tricks on Me by the Ghetto Boys when your kids are in the car. It's not very appropriate. So just a little hint of advice there for everybody. But yeah, that was pretty much it from me. So we'll leave it there. Looking forward to seeing the newsletter this weekend. And adios to everybody.
Take care.
Money never sleeps, pal.
That wraps it up, folks. Thanks for listening to us try to figure out why the world does what it does. The links for the stories we covered are in the show notes for this episode on moneyneversleeps.ie, so check us out online. Also, you can subscribe to the Money Never Sleeps newsletter at moneyneversleeps.substack.com. Remember, if you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with a team at Top Tier Recruitment as they really know their stuff. You can find them at toptierrecruitment.com and tell them we sent you. Also, thanks to Conan Brophy from Create Sound for editing this podcast. As for me, I help startups get their products to market, get customers, and finance their vision. You can find me on LinkedIn, Twitter, or at norioventures.com if you want to know more. And also, you can follow Owen on Twitter at OwenFitzgerald9. Finally, till next time, thanks for listening. See ya.
Money never sleeps, pal.